In today's video, we're going to get a pulse on the main markets. We're going to examine how risk-on or risk-off behavior is eventuating inside the crypto market. Many people in traditional markets don't understand crypto is a very powerful risk-on or risk-off indicator. It can read what could potentially happen with the stock market. That's why if we don't look at what's happening inside crypto, it can be very difficult to measure risk-on or risk-off sentiment inside the main markets. Crypto does get buffeted around by the news quite a bit. We're going to look at where smart money is buying and selling, the economic data that's coming out during the week, and we'll paint a picture as to what that means. Will the Fed or won't the Fed increase the federal funds rate? We'll look through gold, silver, the DXY, yields, and a raft of other charts to get you synchronized in with the markets. Because we know that is a rule, synchronization profits. Stay tuned, it's going to be a lot of fun. A couple of days ago, the crypto market went deep red, but we can see it's recovered quite well. The Hinman emails are set to be released, and it could expose some things that the SEC doesn't want exposed. For the week ahead, there are some news events that you must be aware of. One thing that we're noticing are junk bonds starting to express interest in risk-on activity. The market, however, is throwing unclear signals. We can see the VIX starting to level out. Of course, the NASDAQ and the S&P are doing really well at the moment. We'll have a quick look at those in a minute. There's a raft of economic data coming out this week. Tomorrow, US consumer inflation expectations are coming out, and they're expected to drop. In Australia, consumer confidence is expected to increase, and also business confidence. In the UK, in Great Britain, it looks like average earnings is remaining sticky and expected to increase. We can see the unemployment rate is expected to remain stable. We've had less people applying for unemployment benefits, but the labour market is still soft. The US inflation rate is expected to fall, both on the core and the year-on-year and the month-on-month. All good news. Looking at the 14th in Great Britain, industrial production year-on-year is improving, as is manufacturing production. But month-on-month, it's taken a little bit of a dip. We can see GDP year-on-year and GDP month-on-month both improving for Great Britain. The forecast in the US is for the Producer Price Index, or PPI, to actually decrease, and this is a good thing. All measures of the PPI are coming down year-on-year, month-on-month. There's an expectation that the federal funds rate will remain unchanged on Thursday's, or the 15th, FOMC meeting. However, the ECB is not going the way of the Fed, or is it? We're expecting a 25 basis point increase. Retail sales are expected to come in softer. On the 17th, the University of Michigan Consumer Sentiment Index is estimated to come in stronger. Financial markets pay you for your synchronization, and that's all you get paid for. This is all about Rule 603, Synchronization Profits. The Tier 1 and Tier 2 charts are very important for you to understand. We can see the NASDAQ is currently at strong smart money buy support. We would expect a technical bounce up. In under 3 days, the next FOMC meeting is on the table, and there's currently a 21.8% probability of a 25 basis point increase. 1 day ago, it was nearly 30%. Financial systems are inherently complex, but what the central banks do does matter. For example, if the Fed increases the federal funds rate, it's going to increase yields. That is not good for gold or silver. Typically, the yields love to hang out with the DXY. They're good friends. When the yields start to spike up, the yields call out to the dollar, "Hey, bro, join me. Let's go for a ride together." Unfortunately, if yields in the DXY get in the same car and start to go up that hill, everybody suffers. Yields, DXY, don't do it. We're therefore hoping for yields to go down, but just hang on to your seat because financial markets don't do as they're supposed to do. We are prepared all the time. Art said a fantastic comment. Thank you, my friend. A couple of days ago, the crypto market went deep red. Transforming fear into courage is very, very important. Anybody who leaned into that price action has been doing quite well. But that's not what retail did. Retail ran screaming from the building because they're told to do that. But not so in our community. Art said, it takes a long time to be able to disconnect from the fear-based response that we were born with. Art says, I concur with that thought. When I was younger, an event like this happened, I'd sell out and stick my head in the sand for a couple of months, licking my wounds. Now I am prepared with buy orders in place for just such an event, and I'm feeling good about the last day. I picked up a lot of bargains on projects I want to hold long term, as well as those that I wanted to trade. I'm still getting used to the SL levels, the Standfield levels, and I can say that they are playing out very well in real time. Thank you, Art, for your fantastic comment. Art is so insightful, as are so many people in our global family, over 16,000 strong. Talking about SLs, what's going up with the US 10-year? And you know you don't want that US 10-year to hop in the car with the DXY. If you're new to the channel and the community, a very, very warm welcome. And of course, welcome back, CTKS family. The reason that we mark up our charts with the CTKS method, the world's most powerful smart money algorithmic buy and sell level detection system, is because we need to know. We hate guessing. What is the structure of the US 10-year right now? To find out, you just pop on your indicator that you get inside the service. And what do we notice? A lot of overhead resistance, a lot of immediate overhead resistance. The negative potential of yields to go down is on the cards. We have a very simple rule. These particular lines are called Standfield Levels, or SLs. The thicker the line, the more clustered they are, the more smart money and algorithms will step in and push price down if these levels are above price. If they're below, exactly the opposite happens. We see that these represent safety nets inside the market. And I'm going to show you ADA a little bit later on. The SLs on ADA played out very, very nicely because we trade the right-hand side of the chart. And I'll explain that a little bit more later. The US 10-year and the DXY are really good friends. They go everywhere together. We know that synchronization profits. And what does it mean? If you are in synchronization with the market will pay you. That is as simple as it gets. If you're desynchronized with the market, you will pay the market. You are not in competition with other people. Inside financial markets, there are millions and millions of participants, and they all buy and sell for different reasons, not the same reason as you. Here, we're looking at the DXY. And Miles said, many thanks for all the videos lately, the Tier 1 charts and the SL explanations, and the 2 to 5 minute bit altcoin comparison analysis have been really helpful. With this knowledge, your guidance and experience, I'm slowly having a better understanding of your teachings. Miles, I can only say, woohoo! That's just beautiful. Kate and I each day do these videos to help you to be more of a financial blessing and an emotional blessing to yourself and those you love. Comments like that just really make our heart pop. The only way we can figure out if the DXY and the yields are going to get into the car together and go driving up that hill is to turn on the indicator. And these indicators are provided free of charge. How cool is that? As part of your monthly subscription to the CTKS Method service, which is on ctksmethod.org. These are smart money buy and sell levels. When they have a confluence above, it's really hard for the price chart to get through those levels. And if it drops from a level of very, very strong support, baby, it's going down. Gold and silver and a lot of the commodities live in an inverted world from the DXY and yields. As yields go up, as yields hop in that car and put the accelerator on to go up that mountain of price, gold and silver typically say, oh no, yields is going up the mountain of price. We must head in the opposite direction. Wherever, as a rule, gold and silver are going, the yields are going in the opposite direction. But beware of this, the market likes to play with people. Those associations sometimes break down. That's why you must be really flexible with your rules. What we're looking at here is the SLs, or the Standfield Levels, for gold. Now that you know, you've got a bit of a feeling about what yields in the DXY are doing and have been doing, you can see that inversion with gold's price. But however, gold, currently 1956, is coming up to this 1954 level. That is support. What do we know about SLs? If the SL cannot be held, it's going down to the next one. If we have a light level of support here and a heavier level of support down below, just assuming the price was above and it's coming down, this is stronger. If we get a thing called positive air, which means the buyers are stepping in, wow, that's fantastic. That's what we want to see. One thing that you will always see as well, price rebounds from SL to SL, from SL down to SL and back again. This is the nature of price. It's always ping-ponging between SLs. And Edwin, what a cool comment, in SLs we trust. A lot of people get perplexed because even different commodities in the same group, such as silver and gold, tend to move not quite so similarly with each other. And the question is always, why? It's mainly because you have thicker or thinner SLs, either as resistance or support, and you can learn how to apply the CTKS method to your own charts. I'd really urge you to do that. You learn the CTKS method once and you can apply it for a lifetime. Wow! Let's have a look at the monthly service indicator and just turn it on. Where is the strong resistance? And did price get above that? No, it didn't. That 24.41 mark was just terrible for silver. But if you knew where your SLs were, you already knew that. You know that price goes from SL to SL, SL to SL, SL to SL. And if it can't hold on, it's going down to the next one. What we refer to these SLs when they're, just say the price was up here, we refer to these as safety nets or ceilings if the price is below. If you have a lot of safety nets below price, of course that's what you want. The complexity in financial markets is always the fact that the interplay and interrelationships between charts, they're not one-to-one. They're gravitationally on average, and that gravitational part really messes people up big time. In time, you'll learn to understand it, but it will take some time, and it's important to be kind to yourself through that process. Rajat said, what a beautiful thing. The Standfield lines make it possible to bore SOG on days like these, and that particular day was pretty red. It's a crazy thing that when it comes to financial markets, people want to buy when the price is going up. That's equivalent to you going to a department store and saying, I want to buy that iPhone, but I'm only going to pay 20% above retail price or I'm not interested. And it's equivalent to saying if that iPhone trades at a 20% discount, you just run out of the Apple iStore and say, no, I can't buy that. Oh no. Let's have a quick look at ADA. ADA's been really interesting. When we had that alt meltdown, wow, look at that. ADA just plummeted. Let's pop on the indicator from the CTKS Method service. This is a tier 3 chart. What we noticed was their very, very strong support around this particular 24.29 level. very beautiful support. When price is just climactically coming down, people are freaking out. They're absolutely beside themselves. They're saying, it's going to zero. I need to get out. I need to get out. And what happens is, as price falls through more and more support levels, safety nets, what you see is a bounce in price. Please let me know in the comments, did you manage to get into ADA around this particular area? If you did so, you are awesome. Beardy had a really great comment. I had the confidence to get into the market while the capitulation was occurring. I had the confidence because of the SL safety nets below, like firefighters with a trampoline. Oh, Beardy, that's so cool. Ken, can you take a couple of seconds to clarify what you mean by trade the right side of the chart and not the left? Thanks. Of course, Beardy. Very happy to, my friend. Let's use ADA as an example. It's a really good question to answer. Let's have a look at this price momentum inside ADA. We saw it coming down, and then all of a sudden, ADA just dropped. It hit some kind of support level, but where was that support level, and how could we have known ahead of time where ADA would be good to lean into? Because we are firefighters and we know that trampoline is there. Why don't we think about if we were just being a conventional or traditional investor or trader, and we put their EMA 20, 50, 100 and 200 period EMA on. Does it tell us where we can expect price to go to? No, it doesn't. And you can see that clearly playing out in these particular lines of statistical analysis. And that's what it is, stats. What about if we pop on our BBs, our Bollinger Bands? Do they help us to understand? Well, not really. They don't tell us where the trampoline is, to use Beardy's words. Great words, Beardy. What about if you were in the monthly service at ctksmethod.org and you throw on your free indicator? What do we see here? We can see that ADA was trying to reach this particular smart money sell level at that 32.88 mark. It was not having any success, but we had really strong confluences of smart money algorithmic support between that 29.01 and up around here to the 29.51. But as soon as it broke underneath that, it didn't even wobble around it. It just retested. We saw that there was a problem. We were in all likelihood coming down to lower SLs. And when we look at the lower SLs, there was a confluence around that 24.26 mark. And where did price find its base? It found it in that area. We already knew this, and these lines are marked up through the CTKS method, which is a standards-based approach to marking up lines. When the market was coming down really hard, I made sure that I posted some of these levels on Twitter to help people to understand. I also published the indicator inside the CTKS method service. One thing that you will note, just like Beardy said, these are trampoline-based levels. They have their own gravity. They're like a planet. They pull price back to it. And if you see the price makes it above an SL and another one, it's going to the next one. If it's falling below, it's going to the next one below. If it turns around, and there's so many ways that you can figure out if something is turning around or going down. I'm just going to turn these BBs off, as lovely as they are. I'll explain a little more. When we say that we trade the right-hand side of the chart, what we're basically saying, just pretend we're here and we do not know the price that's going to unfold, but we do know the structural levels inside ADA's price structure. We know those, but we don't know how price is going to react to them. We will let price reveal itself. All the greatest traders and greatest investors in the world do this. They let price reveal its own nature. These SLs are based on that concept. What did we see here? We saw that this very strong confluence of support held ADA's price value. And that's really important to understand. If this confluence of strong SLs wasn't there, the algorithms, the smart money, they wouldn't have lent in. ADA would have gone down much, much more, and it wouldn't have rebounded because this is a gravitational well. What do we notice? As price improved, it came up to the next SL, tried to retest the one below it, but it had positive air. That's a very good sign. Came up, negative air, because there's a lot of resistance here, and pushed it back to that SL, forged it up. And these long spikes inside the market, if they're to the upside, they're short liquidations. If they're to the downside, these are long liquidations inside the market. Where was it going to next? If it got above this particular 26.39 level, well, it was coming up to around the 27.62. Did it hold it? No, it didn't, but it had support. Tried to reach it again, didn't make it, came back to support, is currently flirting with it. And where are we going to next? You can see a retest. Now, what I want you to imagine, try to get that certainty from this price chart without that indicator. It would be enormously difficult. And if you would like to get this ADA indicator, just become a member of the service. There's currently 20 indicators there waiting for you, and there are more to come. Jason had a really cool statement. ADA SL was on the money. Nice one, Jason. If you want to get synchronized in with the stock market, looking at Bitcoin and crypto is a powerful way to do so. Why is it powerful? If you listen to Chairman of the SEC, Gary Gensler, well, crypto's for like naughty people, people who don't do the right thing. Gary Gensler's actions deserve a video of their own, and yeah, that's one I would be very happy to make. When we look at Bitcoin, the reason that you should look at Bitcoin is the ruler of the crypto space. As Bitcoin goes directionally, so too does the entire crypto market. But it's much, much more valuable than that. If you're in the main markets and not even interested in crypto, you should be. You should look at Bitcoin as a risk-on, risk-off indicator, just as you would junk bonds or high-yield corporate bonds. And if you don't know what I'm talking about, that's probably time to open the books and have a look at why they're important, and they really, really are. The way to get synchronized in with financial markets, first of all, you must know the levels. You must know where the smart money is buying and selling. If you don't know these levels, it's very, very difficult to comprehend where price could be going. Also, with Bitcoin, this is a powerful risk-on and risk-off sentiment indicator. So much so that Bitcoin typically hammers the bottoms out when you have massive capitulation in the stock market. That's something I think you would want to know about. What do we currently see here? Bitcoin is trading at 25,956. That 25,925 level of smart money now support has been retested. That means very, very good things. And don't forget, with the CTKS Method Standards, you don't have to just draw up the mandatory. You can go lower as well. Just a point. When we look at the higher Bitcoin level, wow, it's up here at around that $27,020 mark. If we start to come up, 27,000 is in play. That would be very nice. If you would like to become a member of the CTKS Method monthly service, you can become a foundation member at just $39 per month. That's a massive discount on the $99 per month. And if you lock in that $39 per month, it's yours for as long as you are a member, even if the price goes up. And the price will surpass $99. It will be on its way to $129. But not for foundation members. It will stay at $39. It's incredibly important that you understand how the S&P 500 could be moving for the month, the NASDAQ could be moving for the month, the VIX could be moving for the month, the DXY, Bitcoin, gold, US oil, junk bonds, US 10-year, and all of the rest of these. And there are videos inside the service as well explaining those three paths. We always do three-dimensional risk management, and you will get an indicator for each one of these. Just to let you know, bonds has been swapped out with Microsoft, and the global family has decided that total is the best indicator for that tier 3, and I agree, that's a really, really good indicator. The Microsoft indicator came out yesterday, and the video as well. I would suggest if you're in the monthly service, please watch every single video. To get synchronized, there literally are no shortcuts. You must put in the work, but it's really worth it. You're putting your money on the line. You should try to understand the financial markets as well as you can. I would strongly urge anybody who is interested in learning the CTKS method to do this for yourself, and that's a really good thing to do. You want to empower yourself. You can draw those SLs yourself and apply it to any price chart. Just simply learn level 1 certification and level 2 certification. The key with all learning is to go slow to go fast. A lot of people just blitz through learning and they wonder why they can't remember where something was, or they don't think that it was covered. I know exactly what is covered in the content. I always make sure that you have very, very solid foundations. I guess that comes from my extensive experience as a lecturer in first and second year statistics. Level 1 certification is the foundation. Level 2 is the secret sauce. But you must do level 1 before doing level 2, or you'll be a builder that doesn't have a foundation or walls. You can't build the roof first. And you will see that level 2 certification is pretty in-depth stuff. To draw these lines on a chart, you may think it's pretty easy, but it's not. And anything that is valuable is hard won by. But this is a skill for life. You can learn it once and apply it to any price chart. That's why I go slow through this content, so you really know what you're doing. One day you will look at price charts like this and say, I got it. As well as looking at volatility as your best friend. The service is for levels, the masterclass is for knowledge. The two couldn't be more different. I'm very proud to offer a CTKS partial masterclass scholarship, and your name could be those ... there. There's a link to apply in the description of this video. The masterclass is more than 3 decades of knowledge transfer. It will require persistence and commitment, your focus on learning, going slow to go fast, and being kind to yourself. Many people have found the masterclass to be life-changing. If you come across to cryptotechnicalanalysis.org and then click on the testimonials section, you'll see exactly why the masterclass was created. It is all about knowledge transfer, and you can also see that many people have found the masterclass to be a really good thing. It's focused on your understanding, and I love making learning knowledge fun because, hey, that's the way it's supposed to be. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again tomorrow. Bye for now.